So if we look at our income statement, you just think about your income statement here. And we're going to have a pretty simplified income statement here. Revenues minus expenses equals net income. And we have a pretty simplified balance sheet here, which has assets, liabilities, and owner's equity. What we're saying is that if we incur a cost that is not related to our manufacturing activities, it's not related to manufacturing an asset, then it's probably, or maybe I shouldn't say that, in all cases it won't be a period cost, but frequently it will be treated as an expense, that is a cost of that period on the income statement. So it will lower net income in the year or in the accounting period in which the expense is incurred. But if it's related to the inventory that we're manufacturing, that is, that's what we're about. We manufacture some item of inventory and then we sell it, hopefully for more than it cost us to make it. If we do that, we're setting up the item as an inventory item, an asset, and not letting it reduce net income until we actually sell the product. So here's how the flow goes. We incur costs for material, labor, and overhead, and then at some point we're going to take some of that material and put it on the factory floor. We're going to call that work in process. So I like to think of the material as in some pile behind our factory building, and occasionally we send someone out there to get a bit of material and bring it onto the factory floor. And so we've got material there to work with, and then we go get some of our labor. We get someone to work on that material. Maybe they just bolt different pieces of material together, or they drill holes in it, or they polish it. Whatever it is they do to that material to make it into our inventory item, the thing that we sell, that's the labor that's applied to that material. And then we have other types of costs other than material and labor that we can't associate directly with the inventory item that we're constructing here, that we're manufacturing. So I like to think about work in process as being stuff that's in the middle of the factory floor being worked on. So we'll take material and put it into work in process. When one of our workers works on our inventory, we'll transfer those costs to an account for work in process, and we will also transfer some costs that are sort of generic in nature, sort of vague. We know that they're related to manufacturing, but we can't associate them directly with any specific jobs. They're sort of costs that are incurred that facilitate us making all the goods that we make, not necessarily any specific lot of goods. And I'm talking now specifically about something called job order costing. I won't go into that too much at the moment. I'm going to try to keep this brief, but that's what I have in mind. We have specific jobs that we're trying to work on, like an order. Maybe it's of 100 units of something or 100,000 units of something. But although it may be multiple units, it's one specific job that we're trying to make sure that we keep track of all the costs related to that one specific job.